What's going on, folks? Taking a look at the stock market index futures early this morning, February 22nd. Wow, the second month of the year is almost to a wrap here. Things are flying. Markets are not off to the greatest start to the year. We are definitely in the red, and well, we'll see. We'll see if we can catch up to 2021. Market was up 30% for the year. That was an incredible year to be an investor. Also a real estate investor. Markets did really well for real estate investors. So we're on TradingView. We have the Dow, the Nasdaq, the S&P 500, and the Russell. Taking a look at the futures here, we'll start to the top left-hand side. We have the Dow Jones, the index futures. So the reality is the markets are down. Cash markets were closed yesterday, the 21st. They will be open today. The futures, although, were trading yesterday, and yesterday was quite the ugly day. A lot of the markets shedded many hundreds of points, but that was to be expected. And well, you might ask, well, why is that? Well, a lot of the markets have actually been short for a while now. These charts do not look good. They are ugly, to say the least. And they have indicated for a while now that it is time to be short this market. Or at least, if you're not a short trader, take your profits and go flat the markets until they start to show strength again. And yesterday was just another day of confirmation that these markets are going to still continue lower, at least for the short term. So the Dow Jones got smacked pretty hard yesterday. That's up on the top left-hand side of the screen. And for some reason right now, it is showing the February 24th bar, and it's up. That is not correct. The markets are down. Futures are down about 300 right now, but you can just ignore that. So that's the reality, is the markets continue to get hit, but let's not forget that they've been short for a while now, or they've been indicating either take your profits off the table or you better go short, because we're going to be in for some choppy times ahead. Dow Jones is below its moving averages, 21, 250 day. We continue lower here. Let's see if we undercut this low here on the 25th of January. That could really get things cooking if we start to trade under that. That was a nice bottom for now. All right, right-hand side of the screen, over to the tech, the Nasdaq. Nasdaq has been in a nice downtrend. Lower low, lower high, and we are on the workings of another lower low. We're getting close to a 50-day crossover below the 200-day. As you can tell, we're well below the 21-day as well. So the Nasdaq is another one of those markets that have been short for a while now. And if you are a short trader, or if you have at least taken your profits, not too much to worry about. So that is the Nasdaq. Things aren't looking too hot here. Let's jump down to the bottom left-hand side of the screen, which will be the S&Ps. S&Ps as well. We are trading down. We are in that downtrend, lower low, lower high, and then we haven't quite made a lower low yet below this January 24th low yet, but It's probably only a matter of time until we do that. We are below the 50, 21, and 200-day moving averages as well. Something on the other side that has been holding up quite strong, at least stronger than its other market relatives, is the Russell 2000, the small caps. They have not been hit quite as hard as the rest of the market. Although they are still pretty bearish, you're getting those lower low, lower high, lower low, basically an equal high, and then you really get that smack down to that lower low, another lower high. We'll see what happens here with the Russell. Well below the 50, the 21-day, and for some reason the 200-day is not showing up on the chart here. So, although it sucks to see the markets move down lower, it's part of the way the markets work. At some point in time, we get these prolonged, whether they're sideways consolidations or whether they're more of a longer-term, multi-year downtrends. Right now, it's basically been a sideways market with a slight downward slope to it. But let's not forget, we're still up quite a bit in the market. Last year was up 30%. So if you shed a couple percent off of that, that's still not too bad. If you've been buying the tops up here, then obviously you have different thinking than myself and you are underwater. If you were just a buy and hold investor, you are underwater for 2022 this year as well. We'll see. We'll see how much fear is in the market, and we'll see if we double bottom at some of these levels here. Like if we look at the S&P on the left-hand side, we have a bottom here on the 24th of January. Do we double tap here with the S&Ps and rally up? I would not be surprised to see a move like that. I've seen those moves many, many times with stocks and market indices. It's pretty much right at the time. So you'll get a move down like this. Let me show you on the Nasdaq chart right here. You'll get a move down. Obviously, people are fearful and bearish. You'll get a move up. You'll get that next flush down in price. This is the area where people really throw the towel in because we undercut this low here on the 24th. And that is the time you'll see quite often that the markets will, they might undercut that low, but when they do, that could be it. And then we'll see a rally take place here. And that rally can be strong, it can be fast, and that is when you want to jump on board. Of course, not financial advice, but that is where we look for areas to establish positions when we start to show strength, and that low was not that undercut of the low was not confirmed, and we're actually moving in the opposite direction. So we'll see if that happens. Now, we believe that the price will move before the news. So what I mean by that is, let's take a look over here at the S&Ps. As we could see, I mean, today's news could be pretty bad, or last night's news was definitely negative for anybody who follows that quite closely. But we could see the markets actually start to move higher, and they could be up in this area well before any positive news comes out regarding whatever it may be. At the starts of rallies like this, we could see still negative news. And then when we start to get up into these areas where people look at the markets and go, oh, the markets aren't really down that much, you'll start to get that positive news. prices tend to break out, whether that's up or down, before news events take place. And the opposite is also true. So I have mentioned that these markets have been short for a while now. They have not been bullish charts. And we're starting to get more and more negative news. But if you're already short the indices, then this doesn't mean anything to you. You've already been in the trade well before any of that negative news came out. When things were showing topping signs up in here, and if depending on how you trade, whatever models or rules you have, I would assume they would be in a either flat position or a short position well before any of this news has come out on any of the wars or whatnot taking place around the world right now. So I think that is something that just takes some time to learn. Trading off news and emotions is a dangerous place to be, but I think for a lot of traders, that learning process only works itself out by time and trial and error. So I just wanted to share, excuse me, a couple of these charts with you guys and show you that these are not bullish charts right now. But markets tend to rise over time. So this thing can change on a dime, and we could see a change in trend quite quickly. And if we start to really rally here, we will reconsider big time on the bull side of the market. Being short is a risky place to be, but there are times when the market says it's time to go short. And if you're not comfortable with that, going flat, taking your profits is also a great spot to be in. Wait it out. Wait for all the choppy noise to be behind you. And then when we start to show signs of strength, jump back on board and take advantage of those trends unfolding. So that's kind of our thoughts here. We remain on a defensive, on a short side for the markets until they start to show some strength to the upside. Until then, we would not be surprised to see more downside price action. So when we saw the markets fall yesterday, and again this morning, that doesn't really surprise us because we know that many days ago, these markets have been showing signs of weakness and not bullish action. Like I said, we do not argue with what the charts say. The charts are right. They don't have any emotions, and that is what we are sticking with here. So that's just some of our thoughts here on the market indices. Let me know down in the comments what your thoughts are on both the stock market and the cryptocurrency market. Another tip I'll share with you guys is you'll tend to hear and see the most negative news right at market bottoms. So keep that with you for what it's worth. You can go back to March 2020. Go dig through news articles and you'll find news that was very bad or full of fear right at the March 2020 lows. So we'll see how bad the news gets here with what's going on in the world. And if it's starting to get real bad and people are getting real scared and panicking, we could be close to a market bottom. We'll see. Not saying we are, but that's something to keep with you moving forward is when the news is the worst and the fear is at the highest, we tend to be near market bottoms. Keep your eye on the CNN Fear and Greed Index. Keep your eye on the VIX futures. But we are still at very lofty levels in the market. So who knows how much lower we will drop. We could obviously drop much lower before finding a bottom. A lot of these charts look like they have a big big waterfall move to flush people out to the downside still. I mean, these lows here can get undercut and be quite a sight to see and a scary thing to see if you are long or holding any leverage. So look for these lows here. Be careful of these lows. These things can get undercut and the price can drop quickly to the downside. Oh, there we go. All right, everybody, consider subscribing to this channel for more content like this, futures, crypto, stocks. Hit that like button if you enjoyed this video. Be careful out there. These markets are wild right now, and I'll catch you all in the next video. Take care.